Yeah, it is, Cara. Even though we had some pretty poor NAB business confidence data this morning, the Aussie dollar sits around 75 cents, as you mentioned. And I think the important thing to refer back to is last Friday, we saw fresh cycle lows down around that 74.10 area, and then a pretty impressive recovery into the weekend. Saw the Aussie close back around 74.80ish, and it's the second Friday in a row that we've seen this happen. So it is potentially one of two things. It's the Aussie potentially looking for a bottom, or it's just people squaring up shorts ahead of the weekend. But the way that this chart formation sits to me is the entire decline from 80 cents, it hasn't really been impulsive. It's been a very gradual grind lower. When we think about going back to the COVID 55-cent low, that was just absolute capitulation. But this has been a corrective sequence in my view. Now, I need to see more evidence of this to really become convinced. But my inclination is that it is a correction. And that evidence would be, we've spoken about this previously, up above that 200-day moving average, which is currently sitting around 75.78. I'd like to see two consecutive closes above there. And I'd also like to see the Aussie get back above 76 cent, which was the high we had just after the RBA last Tuesday and a couple of weeks ago as well. So I have a bit of a working hypothesis here, Cara. I'm not 100% convinced yet, but the way the decline has unfolded, just to me, it's been a corrective pullback. It's not been an impulsive pullback. And for that reason, I favour the upside, but needing further evidence to support this and to really, see that evidence come out over the next week would be very encouraging. We've got Australian employment data coming out on Thursday, US CPI coming out tonight. So there's plenty of opportunity for the Aussie to do what we're looking for. Not too far away, about 80 pips below those areas. So something to keep an eye on for the next, 48 hours, if you like.
Yeah, so you're not in this trade yet. It's a sit and wait.
Yeah, it's very much a sit and wait. I mean, you have to look at it and go below the 200-day moving average, just in conventional charting theory, that is really signaling that the downtrend is in place. But moving averages are a bit of a lagging indicator. So I'm not going to jump in and go, look, this is a short trade here, not because of what we saw last Friday night and the previous Friday night. There is buyers down here that, iron ore is still sitting close to $220 per tonne. We've just had some a very dovish shift by the PBOC last week. Their aggregate credit finance numbers were much higher than expected for June. We had a 50 basis point PBOC triple R cut, and that sort of adds to the impetus for the Aussie that there is buyers down here. So I'm not in the trade now, but if the Aussie could, just watching very closely, if the Aussie can get back above, let's say 75.80, 76 cents, I'll be pretty much all going in, thinking of push up towards that 78.91 high that we saw there in early May.